Hello guys, it's Max here from Daily Market Movements, and in front of me is the gold over the US dollar chart. Significant development during yesterday's session. I did warn off some volatility, and that was due to the fact we had Jerome Powell speaking in the Fed minutes. He did a very good job. He kind of calmed down the markets. Everyone was, looking out to see whether he would have more of a hawkish tone with regards to cutting some of the asset purchases, as the Fed are currently purchasing $120 billion worth of assets every single month, and Jerome Powell does what he does best. He come out with pretty much a pitch perfect speech, and he had no hawkish tone whatsoever, and the markets liked it, as you can see from the performance of the dollar and the gold markets. Now the gold markets have now broken through that barrier of the 50 and the 200-day EMA. We're now testing the swing highs. Now I'm not buying gold just yet. Why? Well, as you can see, this move previously occurred a few weeks back, and then we actually returned back down below the 50 and 200-day EMA. Now, if you watched my videos earlier on this week, you would have heard me say that if we got a daily close above the swing highs, so above this 1835 area, so roughly around 1840, that's an area where I would be willing to buy. And don't forget, that's a daily close, and that's an area where I would be willing to buy the gold markets and target up towards 1900, 1910. But very good for the gold bulls here. We managed to trade back above the 50 and the 200-day EMA, which was very vital for the gold markets to trade higher. That being said, though, any hawkish tones, also look out as it's the end of the month, look for the non-farm payrolls. If non-farm payrolls come in a lot stronger than expected, well, Jerome Powell, one of the main things that he's highlighted is that he said that if economic data does get a lot better with regards to jobs and inflation, then that is a reason that where the Fed could start to begin to taper. So if we get a positive reading, I think that then becomes bad news for gold. So we've got a good news is bad news is good news situation here in the markets with regards to the Fed and their current outlook on hiking the interest rates. So for now, the gold markets, I'm going to be sitting on the sideline, but cautiously looking to see where we get daily closes going forward, as if we do get that daily close above 1833, then I would then buy the markets. On the flip side, though, if we did return below the 50-200-day EMA, I would short this market straight away down towards 1775, as that would tell me that the bulls have no interest in taking this higher, and the bears have now taken control of this market. One thing that will happen, guys, in the foreseeable future is that the Fed will commence to hike interest rates shortly, as the economy is starting to get better. But for now, I'm on the sidelines looking where the market closes on a daily basis.